Okay, still we have several conventions at home. For example, if elders come, you should not cross legs. Okay, if anyone enter your house, you should have a better hospitality. Likewise, we have several conventions in the subject of accountancy too, but these conventions of totally five in number, starting from conservatism, consistency, materialism, timeliness, and industry practice. These are all very simple concepts, nothing too serious to confine with, but just to put it in a nutshell, students, I'm just rushing through this theory part because I think that you already studied everything in your 12th standard. Is that so? All these?
Yes, sir.
Okay.
Yes, sir.
Why? Yes. Perfect. Because if you have any doubts, you can stop me. Clear? So conservatism is a very basic part of accountancy. The conservatism part is always accepting the lower values. Okay, always accepting the lower values, entering the lower value of the expenditures or income, whatever that is related to the business. For example, if there are several valuation method, the conservatism concept or convention says that you should take the valuation which is least. For example, if an inventory is valued at 10 rupees and other method is showcasing 8 rupees, then you should adapt 8 rupees. This is what this convention is all about. Very peculiar, but this is very common. And also, whenever you enter a value of any asset or a material into your business, if you compare the cost and market value, whichever is less will be considered. If the cost is 10, market value is 12, cost will be considered. If the market value is 10, cost is 12, then market value will be considered. Okay. So this is all about this is a very conservative practice and of course a convention that's followed in accounting process, and this is more of anticipating losses all the time. This is the basic concept. Okay, so this concept says that one should not anticipate the income but should provide for all possible losses. Can you understand? Whenever you project any budget or whenever you do your family accounts, you always try to accommodate all the expenses because you don't want to inflate your surplus. This is what the basic concept of this conservatism, which is a greater convention of accounting. Followed by that, consistency. When you talk about consistency, whatever the policy that you adapt in your business, okay, with regard to accounting, I mean the accounting policy, it should be consistent throughout the period of time, whether it is accounting standards, whether it is a depreciation method, whether it is an inventory valuation, whether it can be a distribution of income, whether it's an interest policy, whatever, everything should be consistent. It should not change very often, because when any accounting policy change very often will give a poor financial position of a business. Just imagine you are following a straight line depreciation method for certain period of time. Suddenly you are switching over to written down value. What happens? Your asset seems inflated. Can you understand this concept? Which means your balance sheet always seems inflated. So when you follow any particular accounting policy or standards, better you present everything in a very consistent manner. And then materiality, as we discussed earlier, whatever entries that takes place in a business transaction should have an economic effect. Even if a small dust comes into your business, it should have an economic value even in rupee or paise. Okay, the financial statement, each and everything, it can even be a small item or a bigger one, everything should be materialized with an economic effect or economic value. Any items that comes into a business cannot be disclosed in the financial statements if it doesn't have any economic value. Okay, you cannot say that he is a very good person. You cannot account it. It's a very good business. It's of very greater quality and goodwill. You cannot account it in the books of accounts. Now comes the fourth convention, timeliness concept. What is timeliness? Can somebody tell me? What is the concept of timeliness?
The transaction should be
When the
recorded
bank transaction is
chronologically.
Yes, one at a time.
The transactions should be recorded in chronological order.
Very good. Anything else? Yes, that's it. Yes, very good, Sherlyn. Yes. So, as Purnima said, chronological order should be maintained and also accuracy of time and date. Okay. And if today the transaction takes place, the date should be today. Okay. There should not be any future date or past date. And there should not be any delay in recording the transaction because it may lead to manipulation, misplacement, or misappropriation. Yes, Ebenezer T, anything should be shared here now? Ebenezer
No.
T, okay. And also, the principles of timeliness will make your financial transactions better. Okay. So, a timely recording of business transaction is inevitable for a proper financial projections of your business. So the timeliness concept is very important for any business. So then and there it should be entered, date-wise entry, chronological order should be followed, and also the period of financial year should also be notified appropriately, right? Um, and also this principle is followed particularly while verifying day-to-day cash balance. Principle of timeliness is also followed by banks. That is, every bank verifies the cash balance with their cash book and within the day, the same must be completed. You would have just see bank employees working till 2 p.m. and breaking their heads till 4 p.m. or 5 p.m. just to balance a book value and cash balance. Okay, this is very important for any financial aspects. And finally, industry practice is very simple. According to the industry, the financial statements, formats, everything differs. Okay. Initially, when we discuss about types of accounting, we discussed about financial accounting, corporate accounting, cost accounting, management accounting, advanced or special accounting. When you talk about financial accounting, it involves all the types of business related to sole traders and partnership firm, HUF associations, etc. And you can see several types of accounting statements like branch accounts, hire purchase, depreciation accounting, double entry, single entry, etc. When you think about corporate accounting, it all governs by the Act of Companies Act 2013, and also AS6 format, cash flow, everything should be followed. And even the trade, even the profit and statement of profit and loss account, statement of balance sheet, everything should be appropriated according to the legal act of companies law. And followed by that, we have management accounting, all the funds, cash flow statements, everything should be as per the accounting standards. So whenever you talk about types of accounts, the statements, everything differs. If you talk about banking business does not prepare trading and profit and loss account because they are not involved in trading. Okay. Instead, they have their own schedules to be followed, which is advised by the Reserve Bank of India under the Act 1935. Similarly, if you talk about electricity, okay, electric supply companies, they have just a revenue account. If you talk about railways, they have different statement of accounts. This is how industry practice works, and this is a pure form of convention in accounting practice. An accounting equation, I think everybody aware. What is accounting equation? Can somebody tell me accounting
Assets is
equation?
equal to liabilities.
Yes, assets is equal to capital plus liability. Capital is also understood as owner's equity, right? And even you can jumble this accounting equation as you like. Okay, can you retrieve a capital in absence of liabilities but with the presence of assets? If so, what is the formula? Assets minus capital is
Liability.
equal to assets minus capital is equal to
Liability.
asset minus liability,
Capital.
liability plus capital.
Assets.
Asset minus liability minus capital is equal to asset minus liability minus capital
Zero.
is equal to
Zero.
ratio of assets is to liabilities plus capital. Ratio of assets is to liabilities plus capital.
1:1.
Perfect. Yes. So this is all about the accounting equations. So all you need to understand is total assets are equal to the sum of liabilities and shareholders equity or owners equity. And always you need to understand that liabilities and owners equity represents the assets. It can be fixed assets or current assets. Okay. And also you need to understand that you can retrieve the value of assets with the value of liabilities and capital. This is how it works. When you see the balance sheet, when you think about each and every item, you need to understand it clearly. For example, you see a machinery value of 15 lakhs. Where does that machinery came from? Out of the
Owner's capital.
owner's capital. In case if you have bought it in loan, where it will be represented as? It will be a part of
Credit as liability.
yes, part of liabilities, right? So this is how accounting equation functions. I think students, we almost covered this theory part, I think, and I've been just wasting so many classes for theory part. Next class, possibly, we will just discuss on one slide methods of accounting, second slide branches of accounting, third slide accounting cycle. That's it. We are moving on to single entry, double entry differences, assignment of profit, and we will try to work out minimum 8 problems for each unit so that we can finish 40 problems altogether. If possible, whenever we have asynchronous classes, I will give some additional problems, right? And I also received so many text messages on textbooks. I've already told in the class clearly that refer the syllabus properly. There are list of textbooks you can refer. You can buy any books out of your wish. Nothing called a best book. Okay, just make sure that the syllabus are covered. Is that clear? I'm just stopping to present my screen and just going to proceed with the physical attendance.